We've had Anaconda do a couple webinars, but today we actually have someone new coming on. So CFO Rob DeFore, who you've all met in the past, and then the VP Exploration, Paul McNeil. They're going to come on and talk about the resource update that they just put out on Goldboro earlier this week. Well timed, Rob. Appreciate that.
We planned it all around this conference.
I think that most people have just planned everything around this conference. Actually, there's been a lot of great news flow coming out of the region. But yeah, I think, maybe walk through the project or several projects quickly, but you can focus most of the session on the resource update. Anyone that wants to know more about Anaconda can find previous webinars on our YouTube channel. So feel free to take the floor and tell us whatever you want, Rob.
Great, thanks, Deb. No, I appreciate you having us here. Anaconda Mining, as some of you may know, is a really unique junior mining company. Usually in junior mining space, you'll have a company with a good development project or a good exploration project, or maybe some small production. Anaconda actually has all of them and gives exposure to all these things. And we've really developed a platform for growth, which we're excited to talk through. This presentation is on our website. I encourage people to read the forward-looking information. We'll certainly touch upon the future. Anaconda Mining, it's been operating for over 10 years, actually in Newfoundland, relatively small scale, 15 to 17,000 ounces of gold. And for a while was probably looked more like a private company than anything. But really over the last 12 to 16 months, particularly with our new CEO, Kevin Bullock, came on, we really changed the strategy around growth. And we have the platform, and we believe that we can target 50,000 ounces of gold production in 3 to 5 years. And we're certainly going to touch upon the Goldboro update and how that gets us significantly closer to that goal. And we have a very strong treasury, robust balance sheet. We continue to generate free cash flow. So that as we go through this presentation, we are funded to execute on this plan. So we have the Point Rousse mine operation in Newfoundland. That's 10 years of operation, great infrastructure, great people. 2021, we're looking to do 18 to 19,000 ounces of gold, and we'll do. And at today's gold prices and even lower gold prices, we generate free cash flow. So that helps us enables us to generate to invest back into our growth projects, and importantly means we don't have to go to the market every 9 or 12 months to raise capital to keep things going. The next piece of the puzzle of this aggressive growth strategy is the Goldboro Gold Project, and I'm not going to go into too much detail here because I want Paul to really get into it. But we announced yesterday was a step change in the mineral resource and what's going to be a real step change in the economic potential of this project. We initiated a preliminary economic assessment, which we hope to have out in Q2 2021, and we keep moving forward with our definitive feasibility study. But we'll go into that in definitely more detail. And then, exploration upside. Newfoundland's become the hotspot, and we think we have an excellent project in the Tilt Cove Gold Project. 35 kilometers of protective strike length, right in the shadow of a high-producing previous gold mine. So we think there's tremendous potential there to leverage the infrastructure we have. Mark mentioned before, he's right. You need the team to do it. Unfortunately, Kevin couldn't be here today because he's in B2 Gold board meetings. And of course, he's on that board because he started a company, Volta, which he ended up selling, and he's done that many times over his career. Myself, I've done so with Crocodile Gold, which we ended up combining with Lucas Lundin's Newmarket Gold, and then of course we sold that on to Kirkland Lake Gold. And I think now is a good time. I'll let Paul also introduce himself.
Hi everyone, Paul McNeil, VP Exploration. I'm a geologist by background. My experience is primarily in resource discovery and development. Prior to joining Anaconda, I was VPX for Aurora Energy, working on a large project in Labrador, and after that, principal geologist with Paladin Energy out of Perth, Australia.
Thanks, Paul. And important to know, all of us are significant shareholders at personal levels in the company. We're not founders. We bought our shares on the market with everyone else, and we'll continue to keep buying. Notwithstanding the recent run in price, there's significant value left to unlock here. So from corporate structure perspective, again, as a junior mining, we're in really great shape. 160 million shares outstanding, $15 million in cash. This market cap hasn't been updated in a week. We're now closer to 135 million, a significant increase. Minimum amount of debt that we pay back every month, and that'll drop off essentially by the end of the year. Traditionally been more of a retail stock, not surprisingly, but we've seen significant institutional interest come in over the last 6 months. And I think that's going to change quite significantly in the near term. We do have analyst coverage from two of the houses, and both of them have recently updated their target prices significantly higher than where we sit now, notwithstanding the fact that we've run up 25% in the last couple of weeks. So, we're going to talk about Goldboro a lot. One of the engine really here that helps drive this is the Point Rousse operation. As I mentioned, this year we'll do 18 to 19,000 ounces of gold. With last year we did 18,268 ounces, and critically from that we've been able to generate $41.5 million in revenue, a lot of EBITDA, which helps us then reinvest back into it. But again, it's unique too as a junior, because you have that relatively small scale production, but it provides that exposure to the gold price, so we get that good leverage. We're currently mining at Point Rousse at our Argyle deposit, which is just about 4 kilometers away. On its own, at a Canadian dollar gold price of $1,900, generates pretty good after tax, after capital cash flow of $13 million approximately, and these are all Canadian dollars. But at around today's gold price, over the next year and a half, this will generate in excess of $20 million of free cash flow. And again, that's after tax. That's after capital. And as it notes down here, it's still, even if gold price were to come off, it's still a very robust project. And that's the power of being able to leverage the infrastructure, which we'll talk about. So, I said, we have a clear goal. 3 to 5 years, we have to get to 150,000 ounces. And, the Goldboro Gold Project is going to get us a long way there. This has become the single largest gold deposit in Nova Scotia by quite a long shot as a standalone basis. And I'll turn it over to Paul to really give a sense of where this asset has come in 3 years since we acquired it.
Sure. All right. The map you see there on the left, the red star, is the location of the Goldboro project. It sits just to the east of the Moose River Consolidated project, which we heard about earlier from Stephen Dean. So we sit just off to the east of that. And as Rob mentioned, with our recent resource announcement just yesterday, this is a very large gold deposit in Nova Scotia, the largest gold deposit and one of the largest in Atlantic Canada. Looking at the resource specifically, so there's just over 1 million ounces of gold, about almost 12 million tons at 2.86 grams. Those sit within 2 constrained open pits, and including M&I resources, measured and indicated resources. The resource overall is just shy of 2 million ounces within the measured and indicated categories, about 16 million tons at 3.78 grams per ton. And then, of course, in the inferred category, it's just shy of about 800,000 ounces at a grade of 4.68 grams per ton overall. One of the other significant things is that the recoveries from this deposit that we've tested, this is feasibility level testing that's been completed already. That has an average recovery of 96%, so pretty significant recoveries. And that, of course, was used in defining the resource. So the map you see there on the lower bottom, you can see in red is the higher grade mineralized zones, which strike about 2.1 kilometers that we've outlined the resource to date. On the right, you can see the resource outlined in various grades represented by the colors. And then you can see the outlines of the pits in 3D over that 2.1 kilometer length. And so you can see there are 2 pits there, and those are well constrained. And I guess another important point about those constrained pits is they were defined using only measured and indicated resources. Inferred resources were not used in the definition of those pits. So there still remains inferred resources within the pits and around those pits that have the potential to add to that. Next slide, please. These are the resource tables themselves. I think the key reason here why we're seeing a significant increase in total number of ounces in particular is really one of the big breakthroughs, as Stephen Dean had said, is the recognition of some of the low grade mineralization that sits outside of the higher grade mineralized zones. As we continue to drill, we've drilled about 45,000 meters on this project in addition to the historic work. And what we've seen is there's more of this disseminated mineralization in the wall rock. And previously that hadn't been appreciated significantly and certainly wasn't considered in the thinking of the development of the project. So that's a key piece there. The other is we spent a significant amount of time over the last year remodeling of the resource and changing our approach to specifically making the geological model match what we actually saw during the bulk sample and in our mapping, et cetera, and drilling. And so that's another key reason. And then ultimately the infill drill programs, and then recognizing this project as being amenable to open pit mining, surface mining techniques. So you see in the resource table there on the lower left, the measured and indicated resource, just over 1 million ounces, and then another 90,000 ounces of inferred, which we'll be working on converting those as well. But also the underground portion, you can see in the measured and indicated categories of the underground, there's there's 4.1 million tons at an average grade of 6.41, with measured 1.3 million tons of measured at an average grade of 7.36. So there's significant underground potential here as well as open pit as we move forward with the project. So just a couple of slides here to speak to growth. So there's significant resource growth just in the last year based on what we've learned. But one of the important points here is that it doesn't end there. So the key places we see further upside is, one, in conversion of inferred resources within these pits. Secondly, along strike, we know there's mineralization along strike. Not enough drilling completed to model it, but we know the mineralization is there through some step-out drilling. And then right at the margins of these pits, so if I'll get you to look at the top right-hand side, you can see those cross sections and the outlines of the pits. Those on the top right one, for example, you can see the pit only takes in the southern limb. And the reason for that is because the northern limb has very limited drilling and contains only inferred resources, and therefore was not used in the constraining of that open pit. So there's some immediate upside in the pits, right around the margins of the pits, and then ultimately down plunge at depth for an underground development, and then along strike. So still some very significant upside on this project. Go ahead, Rob.
All right, thank you, Paul. So I mean, this is really a game changer for us. I mean, at the end, the key thing is this. The M&I of over 1 million. I mean, that is pit constrained, and all the assumptions that we use to that are in our press release, fully disclosed. And I think anybody who looks at them would see those are very, they're reasonable, they're real, and they're maybe in some cases a little conservative. So that gives you a sense of what type of production profile this could potentially look at. Where obviously you can't give any details right now because we're working through a PEA. And that's why we want to do a PEA while we do a feasibility study. So hopefully in Q2, when we get that out, we can really talk about what this means economically and from a production profile perspective. But it is definitely becoming one of the largest undeveloped gold projects in Atlantic Canada. And as I mentioned, working through a PEA, working through a feasibility study. Also, we continue the baseline work, environmental studies, and hoping, in early 2022, working towards a permit. But we do expect to have a definitive feasibility study by the end of this year. So, that's obviously the biggest focus right now, but we do want to take, being mindful of time, but a little bit of time, because we do want to talk about our exploration in Newfoundland, because we think there's tremendous potential here. Newfoundland's become hot, but one of the really unique things about Anaconda is the infrastructure. We can leverage the infrastructure. I mentioned the Argyle gold deposit earlier, relatively small scale, and on its own would never be a mine. But when you can leverage infrastructure, you can generate cash pretty quick. So we can fast track from discovery to development. And I mentioned the infrastructure. Here's a great picture of it. And the most valuable thing is that big hole in the middle. That is a fully operating, permitted in-pit tailings facility. From an environmental perspective, the best thing you could get. To build that in Canada, you'd be talking tens and tens of millions of dollars. But to permit it, you'd take 3 to 4 years to do. So that's tremendously valuable for us, and particularly as we go forward exploring on the peninsula. Paul, maybe just want to touch on a couple of the highlights of our exploration programs.
So the map there on the right shows the Pine Cove project on the left, which is the mill infrastructure and tailings facility that Rob just mentioned. Outlining going to the right, you can see the Stogger-type mine, which we mined a couple of years ago. We're currently mining the Argyle deposit, which is in the top right, and we've also made a recent discovery, which is an extension of the Stogger-type mine at 278, which is there in the center. So currently we have about 2 years of reserves. And what I guess the reason I show you this particular area to you is because this will be the next mine at Point Rousse. And the reason for that is it's very close to surface, some fantastic drill results. We're currently drilling this off now, nearing the finishing stages of drilling off what we believe will be the next open pit. I won't go through all the results there, but I guess one of the key messages that we took from this is that this really wasn't a primary target for us. And so what we took from it was that there's a renewed energy around some of the secondary targets that we had passed on previously, and we are currently testing. And it's really changing the way we look at the geometry and geology and the prospectivity right around the Pine Cove Mill. Turning now to Tilt Cove. So this is still on the Bay Verte Mining Peninsula. It's about 40 to 50 kilometers from the Pine Cove Mill. So the strategy here is to discover and to leverage the mill infrastructure. We have about 35 kilometers of prospective strike. And the reason this area is interesting is because it contains the past producing Nugget Pond mine, which is the current site of Rambler's copper mill. And you can see that on the map there in the lower left. But the Nugget Pond mine produced grades at 9.85 grams per ton and had 98% recovery for a total of about 170,000 ounces. So very significant grades. We have the same host rocks to those deposits, and we have 13 high priority targets. I'll only show you 2 of those, but just to give you some of the flavor. So right there on the lower left of this map is the Nugget Pond mine. Those hashed polygons, particularly to the southeast of the Nugget Pond mine, are gold and soil anomalies. And you can see as you move along that red horizon, which is the host rock to the Nugget Pond mine, there are a suite of these gold and soil anomalies to the southeast. And that's the down ice or the down glacial ice movement direction. And so those gold and soil anomalies, we believe, represent potential for deposits, high-grade deposits along that Nugget Pond formation. And so those are some of the areas we're targeting currently. We do have a drill active. Next slide, please, Rob. We just finished an area called Betts Cove. We drilled about 1,500 meters there, testing some targets. No assays, familiar story on that at the moment. But this is Growler. This one in particular we're interested in because of it was a recent discovery. We had 2.75 grams per ton over 5 meters, 5.2 meters, 1.78 over 5 meters at surface, and 8.19 grams per ton over 2.3 meters at surface in this Growler area. The Nugget Pond mine sits just off to the right of this page, about 1 kilometer away. So we're right in that zone, and we have 2 drills actually turning currently at this site. Next slide, please. Go ahead, Rob.
Thanks, Paul. No, I think we got a little bit more time for Q&A, but I think, again, I emphasize that Anaconda is a really unique vehicle in this space, given, free cash flow, which generates growth. We have the development project and what's becoming an exceptional development project and exploration upside, all in, Atlantic Canada, which is becoming a great jurisdiction. We have good treasury. We're fully funded to do everything we're talking about, and we get a lot of catalysts coming up over the next 12 months, which we believe are really going to help close the value gap on this. And but we still have a long way to go, and we plan on executing on everything we've talked about.
Great. Well, you're right on your allotted time, so we don't have any time for questions, but I will follow up with anyone that has questions afterwards. Feel free to email me at deborah@adcap.ca. And thanks for coming on. I mean, it's quite an impressive update you put out this week. I think there's still a lot of upside in the story. You said that you have 2 analysts covering the stock, and I see they both had target increases. So I think $1.50 and $2 are your current analyst rating or target. So yeah, I think it's an interesting time for Anaconda. Really appreciate you guys giving us an update.
No, our pleasure. Thanks for having us. Thanks for including us.